Hi there. My name is Jason Gold, and I'm back with another episode of Investor Insights. In today's episode, we're talking about the importance of proactively addressing investor concerns in your prepared remarks. Let's get started with an example. Think about the following scenario. You have a job and you go to work every day, and it's the end of the year, and you come home and you sit down to dinner with your family. And you say, "Hi everybody, how was your day?" And everybody gets to talking, and you say, "Well, I had my review today. And I had a really good review, and I got a nice bonus." And everyone says, "Congratulations, that's terrific." And you continue talking, and over time, as they're asking you questions, as your family is drawing you out and asking you questions, it comes out that your company is actually downsizing and that you've lost your job. And it's okay, they've given you some severance, but at this point, you are totally defensive and answering questions, and the whole conversation goes completely downhill. You can imagine what this is like. You started off talking about all the good things. I had a nice day at work. I had my review. I got a nice bonus. And it wasn't until afterwards that you got into the Q&A that you started addressing people's concerns and the bad news came out. This is a disaster, and you do not want to replicate something like this on your earnings call. I can't tell you how many times I have seen companies whistle past the graveyard, rearrange the deck chairs on the Titanic, figure out whatever silly analogy you want to, but the number of times companies act as though everything is great when the reality is they missed numbers or they took things down is way more than I can count. And this is why I have a business. I'm here to help people not make these mistakes, because investors run the other way and they don't ever really return the way they otherwise would have when things get better if they know that they can't trust management to be truthful. This is why it is so important to proactively address investor concerns in the prepared remarks. Don't wait for Q&A. Don't end up on your heels. Be on your toes and address the things that are going to be on people's minds ahead of time. Now, this takes some preparation. This takes looking through your script, looking through your financials and deciding what are the things people are going to be upset about. It requires you to truly be in touch with what the street is expecting from you. And then using that jujitsu, that judo to understand what they're going to be focused on, to put it into your script. Tell them what went wrong. Tell them what the issues are. Say, "I recognize that these are the issues. Let me explain to you why that happened. Let me tell you what we're doing to fix it. Let me tell you why it's going to be different in the next couple of quarters." That will make people realize that you are paying attention to what their wants and needs are. Now let's go back to my analogy, my silly story, and replay it slightly differently. Again, you have a job, you went to work, you come home, and you're talking to your family at the end of the day, and you say, "Hey gang, I want to tell you about my day. First of all, I want to let you know that everything's going to be okay. My company's going through a downsizing and they got rid of my job. But here's the situation. I had a great review. And because of that, within the downsizing, I'm getting a great severance. And so I've already had some meetings and lined up several other interviews for this week. I feel we're going to be all right." You've delivered the same set of facts, but in a totally different environment that allows you to be completely in control of the dialogue and on your toes. You're no longer on your heels answering questions as to, "Wait, what do you mean? Where are we going to go? How are we going to pay the mortgage? How are we going to pay the insurance? What about our car payments?" All of that stuff goes out the window because you've controlled the dialogue. In both scenarios, the facts are the same. You're actually going to be okay, but emotionally, responsively, you're able to tell them and control what you want them to know, which is you're going to be okay. You have enough money. You've got other meetings lined up. In the first scenario, you never even got a chance to tell people that you had these other meetings and interviews lined up and that you have prospects for another job. The way I told the story, that you proactively addressed everyone's concerns up front. Let me tell you what happened. Let me tell you what wasn't good. Let me tell you what I'm doing about it and why everything's going to be okay and the future is still bright. You got to control that dialogue and everyone will listen to you better in that scenario. I tell this to my clients all the time, and the situation is not every company gets to deliver good news all the time. So this is something that comes up more than most companies want and more than you'd think. Many companies multiple times a year have to deliver news that's not so great. And so I've seen companies run the other way from bad news and hope nobody asks questions about it. I've seen situations where key metrics that were disclosed last quarter are no longer disclosed this quarter because management doesn't want to tell that story. That's a disaster. And I can't say it any other way than this. Don't do it. You have to tell the same story every quarter. You have to disclose the same metrics every quarter. And when something doesn't go your way, when something is not going the way you want it to go, to tell the story the way you want it to, proactively address those concerns up front. Tell people why it happened. Offer an explanation. Tell them what you're doing to remediate it, and make them feel at ease that you empathize with what they're going through. See, you've just given them information that's inconsistent with their model. Now they're scratching their head saying, wait a minute, is my whole outlook wrong? Or are there things about it that are still okay? Was this just a bump in the road, or has the whole direction changed? Address this up front. I can't tell you the number of times I've seen companies do a whole earnings pitch and they don't seem to empathize with what investors are focused on. And that's when stocks go bananas. And they go in one way bananas, and that's down. Don't let that happen to you. And despite what most CEOs think and how they act all the time, investors don't always expect you to be positive all the time. The world isn't only roses and butterflies. Bad things happen. There are bumps in the road that every company goes through. In fact, they wouldn't trust you if everything is great all of the time. Injecting a little humility into your speech is actually a great idea, not just for CFOs who are generally more conservative than their CEO counterparts, but for everyone. I recommend being real and transparent and telling it like it is. Investors appreciate it when they know they can trust you. If they don't think they can trust you and you're always bullish all of the time, you become known as a quote unquote no skid marks CEO. Why is that? What does that really mean? It means when you go racing off the cliff, there are no skid marks on the road. No one will have seen it coming. And those are the kind of stocks that get lower multiples than everybody else. Paradoxically, the more you are genuine, authentic, and humble and tell things like they really are and address investor concerns up front in your prepared remarks and acknowledge the knocks on your story, the higher your valuation is going to be because people will be able to trust you. So what are my suggestions here? Sit down with your IR team. Sit down with your IR consultant. Look through the numbers. Compare it to what expectations are. Look at consensus. Look at what people have been writing about during the quarter and look at your notes in your CRM system and see what investors have been asking about. If there's something in your numbers that's inconsistent with what people are expecting, address it up front. Don't wait for Q&A. If you did something wrong, make it one of the first things that you talk about. See, diffusing your audience and proactively addressing whatever's on their mind before you talk about the good things is always something important. See, investors will see the difficult results in the numbers that hit the press release. If you start off your prepared remarks talking about how great things are, and then you ultimately get to the issues, they won't be listening to the first few things that you were talking about. In fact, just the other day, there was a major internet company, a consumer internet company that everybody knows, that missed and guided down. And the first thing their CEO said was, I'm really excited. I'm really excited? Dude, this is why the stock was down 15% the next day. You as a CEO can't be really excited when you miss and guide down. The first thing that he should have said was, I recognize that our results weren't exactly what people wanted. I also recognize that our guidance takes into consideration several other macro factors that people didn't foresee. Let me explain. And then he could have walked through the things that he would have been bullish about, and the street would have actually listened. Instead, they punted the stock and no one wants to listen to this company anymore. That's something that you should avoid. In the end, this is a way for you to control the dialogue. If you proactively address investors' concerns right out of the gate, you won't be caught off guard, you won't be on your heels, and the sell side won't take control of your earnings call. You want to be in control of your earnings call at all times, and by taking control of the dialogue, by addressing their concerns up front and proactively, you will be in control. So in summary, what I tell you is always proactively address investors' concerns up front in the beginning of your script. That's all. It's really very simple and no different than winning an argument with a colleague or a friend. That's it for today. Thank you so much for tuning in to this episode of Investor Insights. My name is Jason Gold, and I look forward to seeing you here again on another episode.